So whatever the invoicing process is for the client, I don't necessarily want them to change that. For instance, if you pre-bill clients, pre-bill them. If you bill a client 50% upfront, and then you bill them 50% at the end of the project, still do the invoice it the way you invoice it. It's just going to go to a different account on the balance sheet instead of hitting the P&L. When you make that invoice, it's going to hit an account on the balance sheet, which would be unearned revenue. You didn't earn that revenue, you're going to earn it in January, February, March, and April, May. So we would record the invoice like we usually record any invoice, and then we'll use journal entries to recognize that income in January, February, March, April, May. For instance, 4,000 each month. That's how much we would record for the actual revenue in those 5 months that the services are being rendered. You can set up recurring journal entries and make the journal entry stop at a certain date. You could, when you record the invoice, you could just record the journal entries that are needed at that point, so that way nothing's missed. But either way, there are simple processes, so it's not like this daunting task that you have to keep tracking every single month. When you're in QuickBooks and you use the jobs, it helps to sort things a lot better. A lot of my clients do sort their P&L that way, and that's where we want to get them at ultimately if they don't, so that they can even see how clients are performing. But it will also help manage that unearned revenue and recognizing it going forward and making sure that it's on track without having to keep spreadsheets and stuff like that. And so if the accrual numbers are not accurate, you're not going to get an accurate percentage of payroll to AGI.